SwissBorg is the official partner of my channel where you can buy, sell, hold and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Right everybody, let's get into it nice and quickly. There's no need to beat around the bush. We're going to start with a bit of Forex and traditional markets because I told everybody yesterday that I sold all the stocks and things like that, which is fine because that was all part of the Everything Bounce 2.0, which I think has come to an end, and we're now going to sort of sit back on the sidelines to wait and see if we do go to print a new low on major indexes, so indices like the Nasdaq and the S&P. So if we look at the Nasdaq, taking off all the noise, we can see the descending triangle more or less getting respected. I know it's rough and ready, but this is a duration of a bear market that's taken basically almost an entire year now. So it's not going to be perfectly neat. And again, a lot of this is derived through things taking place with the Fed and the Dixie and things like that, which means Forex too. So we shouldn't expect it to be too neat, but it's more or less done what we expected. Everything Bounce 2.0 could quite easily have come to an end. Let me just make sure that the sound is still working. I've had a few sound issues recently here. So again, Everything Bounce 2.0 could quite easily have come to an end. So let's have a look at the S&P. S&P here on the daily hit your 200 exponential moving average on the daily. That's fine. We still got a trend line of our own, a descending triangle of our own, and we've not hit the top of that, which is no big deal. Again, it's rough and ready. These ones were very neat. This one's not quite met that area, but it is what it is. Yeah, as far as the supports and resistances are concerned, we are meeting resistance at the moment. So again, major indexes suggest that is maybe the top of this last bear market rally that we've seen. So how did we diagnose all of this? Was it based around these indices? No, it wasn't. It was a Forex thing that we were thinking about. And with that goes the Dixie. And, we got the top on the Dixie. That was fine. And we recognized that the major area of support would be on a weekly, and it would be the 50 exponential, and that would be the major target. If we were to get down there, that would be it. We've been front run so far. We're sort of heading up a little bit, and this could be it, because we go to the daily, we see supports being the 200 simple and exponential moving average, so the opposite of indices. So they're getting resistance on these, and Dixie's getting support on this. So this is still an uptrend for the Dixie, and this is still a downtrend for indexes, right? So this is why we said bear market rally is probably going to be the situation. Now, over the weekend, I said, look, this is probably a bear market rally, but there is also a chance that this is the low. This could be the low. Now that we've seen such significant dollar weakness, we're going to be volatile. We're going to be all over the place. We're going to also be at the mercy of central banks, and the UK, for instance, are doing, not that they count for much anymore, but the UK are going to be having another big sort of they're going to talk about stuff today, most likely raising of taxes, which is a bit of a jip, but it is what it is, and that's to help try and combat inflation and probably go into a decade of austerity, which that's more or less that's been my entire existence, really. My entire adult life I've been dealing with austerity. So yeah, it looks like that's probably the direction that they're going to go, but we'll see. They're probably doing that announcement now as I speak. And again, that's going to move the pound a little bit. And the pound is what it is. But we're going to focus on the euro, because the euro, outside of the Japanese yen, which is another part of how we managed to get the top on that Dixie, the euro is probably the major component to the Dixie right now. And if we see this, then we've got conflicting information. You can choose to interpret it in two ways, which is why sitting on the sidelines is better than being exposed in either direction. We are obviously at major resistance. On the daily, here's a 200 simple, 200 exponential, but we also have broken out from parity, and we've now got a pump signal on the edgy cloud. So there's two things here. So we've got the normal standard analysis of trend, which is strong downtrend since September, July, September, the last time we tagged that 200 exponential moving average. That was also when I told everybody last year that it's going to be a bullish year for the Dixie. I hadn't looked at the euro, but having looked at it now, it more or less marks the time when we said that this uptrend is in its infancy, and we can now admire the size of that uptrend basically since last September. It's pretty awesome, really. Anyway, So that's all done and dusted. So now what we're thinking about is, right, we've got two things to think about here. We've got major resistance that we're at right now, and we've got pump signal. So who's gonna win out of this one? I'll probably make the case that it's more likely that the trend is going to win because the trend is so strong. This is just a signal. We're not really backed up by anything major when it comes to momentum or anything like that. If anything, we're actually quite high and quite hot on momentum, suggesting a pullback would probably be the most likely situation to take place around here, with the money flow index and the RSI being reasonably high. But it doesn't have to be the case. It doesn't have to be the case. If we broke from this area, we actually would tear up quite dramatically. But the invalidation of this move right now, obviously being at resistance as we speak, would be closures below these previous wicks. So I'd call it 102.6 or so. Basically, these wick lows, candle body closures on dailies below there would bring us back down to parity and probably below there. If we were to remain here or above for several weeks, we can think about the bullish aspect of this, which would be that on the weekly, our 200, our Bollinger Band center, so the 20 weekly, is actually trying to go horizontal, and we'll actually get an uptick on this, provided we stay above parity, for probably a couple of weeks, really, maybe more along the lines of like 3 or 4 weeks, we can get that support above parity, and that would mean that parity might be the new ground floor, so we don't need to worry particularly too much, unless, of course, things take place within the central banks. Let me just check the sound. That would drive this much further down. And again, the ECB are huge laggers, but there could be a complete inverse setup taking place between the central banks, where the Fed start to increase rates at a lesser extent, so maybe 50, maybe even 25 basis points, and the ECB finally decide to go 75 or so on, and that inverse effect will increase the upside momentum and the higher prices of the euro, basically bringing the Dixie down. So it's that kind of central bank situation which would do this, and with that would come a lower Dixie and also higher prices on stocks, maybe marking the beginnings of a new bull market, or at least the end of this bear market. It won't be a tear up bull market like we've seen in the past, but we could think about the lows, particularly for S&P and NASDAQ, being in, and actually we break out of these descending triangles and start to form uptrends and bull markets that obviously go on for years and years. That's also, most of the time, that's also how stocks perform in recessions and austerity, like what we're thinking we're going to go into now with the UK. The UK is doing their announcement probably now, to be honest with you, about raising taxes. It sounds like we're going to go into maybe a decade of austerity, which sums up my entire adult life anyway. So it's no change here really. That's basically me. But yeah, I mean, the recession can correlate quite nicely to upside momentum and higher prices with stocks and indexes. So with all that said, now let's think about what's going on for Bitcoin. So this is long-term time frame stuff. A combination of hopium breaking out of here, with the central banks flipping on each other a little bit, the balance of power sort of shifting into outside of the dollar, basically, at least for the short term, especially since PPI and CPI came through favorably for the markets. I think the markets have already started to price in that 50 basis point or 0.25 basis point, whatever it is that they're trying to price in. But again, it might be the end of the bear market, but it's not for me to say until we actually get some kind of confirmation on this. For the moment, still in the descending triangle. Same thing with the S&P, and the Dixie more or less coming to a major area of support, which is your 200 exponential. So recognize that's a major area of support. This should be below you if you're in an uptrend. It shouldn't be above you like with the S&P. It also shouldn't be above you if you are the NASDAQ, which is quite significantly above us here. So that's the overview of the overall market. Let's have a think about what Bitcoin's doing in the short term, really. So we're on the hourly. I know, it's crazy stuff, really. On the hourly, I would be looking for, just based on this hourly, the way that I'm looking at it right now, we do have a bit of bullish diversion on the money flow index, on the RSI. The MACD is more or less sideways and static. We might be looking for a bounce to take us up a little higher, maybe up towards 17,000 or so today. Again, it would just be a short-term trade. We'll be looking for this kind of area, more or less, with these kind of wicks and bodies to be hit. So between where we are at right now, we could find a reaction right now, or we come down to this previous wick around here, which is just another $100 away from where we are right now. And I'll be looking for a bounce to take place on this on the hourly. Now, this is just an hourly. You would never see me normally talk about an hourly, because what's the point? By the time I've made a video on an hourly, it's going to be irrelevant by the time you guys watch it, most likely. And so we'll be looking for a reaction to take us back up. Maybe at best could take us all the way to 1750 or 17,600 or so. I wouldn't get your hopes up, because if we think about what we're seeing here on the 4 hourly, we're curling over, we're rolling over, basically getting rejections on the 21, and now on this last 4 hourly on the 10. So longer term time frames, the momentum is kind of leaving this chart now, and we'll be most likely seeing some more lows form on this, especially if we get rejections like what we're saying for traditional markets. So S&P, Nasdaq, they are at resistance. They are coming back down again. They're still within their giant descending triangle, bearish consolidation, bear market formation, whatever you want to refer to it as. It's not a bullish situation until we're outside of those, really. And the Dixie is already at support on the daily and front running that major weekly target that we've had. So with all of that said, it doesn't look good in the over the coming weeks or so. However, in the very short term time frames, being the hourly, there is a potential move taking place more or less around now. I would say that would be invalidated below 16,000 getting tagged, then that's it. We'll probably start to go down much lower than this. The confidence in crypto has been lost. It's gone. People are even fleeing exchanges. So if they're not in exchanges, how are they supposed to trade? Everyone's going to cold wallets, which I suppose is good in a way, because it's taking these, whoever wants to hold on to their coins doing it on cold wallets. So there is that aspect of it that does mean in some ways that people aren't going to be selling it, that people are going to hodl are hodling off exchanges. That's fine, but also trading volume, it's going to be lesser and lesser and lesser. It's still enormous compared to what it used to be like years ago, but it's dwindling. So I'm not majorly bullish on Bitcoin, really, until we get back outside of this it's of its own descending triangle, which again is, we can look at this in terms of the entire bear market. We can also think about it of how it looks in comparison to S&P and Nasdaq. Normally a breakout towards the end of an apex is fraught with fake out, so obviously we're back within it now. So a breakout from here, we still have to take it with a massive pinch of salt. We do have all those things that we were talking about, bullish divergence on weeklies when it comes to RSI, money flow index, and even the MACD to an extent. So, which would normally mark capitulation, but there's so many things going on outside of these charts right now that are going to impact crypto, or that can impact crypto. First of all, there's the Forex, there's the indexes, and then there's the FUD, the constant bombardment of FUD. And with all those in mind, we have to think about this chart as basically like an afterthought of everything else. It's just a representation of, first of all, sentiment, and then more or less what it's correlated to, which is Dixie, indice, and probably even commodity to an extent. But I think this is more or less been a bit of a write-off, really, for Bitcoin at this level, and we can't get bullish on it right now. There's no reason to be bullish on it. And to be fair with you, we do have an incoming death cross taking place on the weekly here, which would at this rate probably complete somewhere in the first quarter of next year. And God knows what that means. So, like I say, sidelines is better than exposure at this current moment in time. I would like to see further capitulation on this. Down to 12,000 and maybe a bit lower. I'd definitely like to see that, just to buy some significant amounts of everything back. But there's really nothing in this very short term time frames that's in any way appealing outside of a little bit of a bounce that's going to take place any minute now. On the long-term time frames, we do have major divergences, but it really has to start to sort itself out again. The idea of us reclaiming 24,000 between now and the first quarter seems pretty unrealistic, doesn't it? It does seem pretty unrealistic, but you know, that's not far away. We've not really had any period of accumulation at this level. We've only just gone down to this new level. We haven't already had that kind of accumulation at this area, so we need confidence to resume in crypto. And at the moment, every day I load up Twitter or whatever, there's something new to FUD this out. It does not look happy or good. So yeah, it's I wouldn't say it's over, but the correlation between Forex and indice is still very high. And with that said, I still think downside is most likely, but you know, I'm reasonably optimistic that the low is in for, you know, S&P and Nasdaq. But again, I'm not gonna bet my life on that. We'll just see how that plays out over the coming, well, it's have to be the coming weeks really. And for Bitcoin, unless something special happens outside of this chart, unless something very special has to happen, you know, in order for us to really get bullish on this one, on the long-term time frames, we do have to reclaim 24,000 and kind of do it by the end of January, really, and not even just come up to test it. We have to reclaim it. Right, so I'm going to leave it with you there. Sidelines all the way for me, I'm afraid. It's boring to say. Yeah, I can probably play some derivatives at some point, but stocks are the ones that are giving the more accurate reads. Crypto is extremely flimsy and floppy right now. And with that in mind, it's keeping me away from trading it, where you can look at traditional markets, indices, commodities as well, you know, like gold and things. They're all giving the decent reads right now, and they're the ones that I'm more happy to trade. But even that, I'm waiting to see if we pivot up or down from this exact level, given what we've seen with the Euro and the Dixie and the S&P and the Nasdaq. So nice and boring for you there. Hopefully that's got something to there's something in there for you to take out of this video. I'm happy to sit back and chill and watch and wait at this exact moment in time. There will probably always be setups take place on altcoins. This is what the last bull market was like. There's huge, and I'm calling it, I say bull market because in a bull market you have huge peaks and troughs, rotations from bitcoins to altcoins. You have all kinds of things, and in amongst all of that, you can find charts to trade. But right now, and still personally, I think it's better to wait and see what happens over this week specifically, but next week and probably the next few weeks leading into December, which unfortunately December's can often be pretty bearish across all boards anyway. That's where I sold the majority, well, not the majority, a good 1/3, sorry, of my Bitcoin was sold last December, as Omicron was coming around the corner and tax season and stuff like that. So yeah, Decembers are not usually a good look for anything. So further downside, most likely on the higher term timeframes, despite a short term time frame bounce of maybe $1,000 worth of price action on Bitcoin today, maybe. Right, thank you for watching. Hope you have a nice day and take it easy.